Okay, so I told you this area right here is an area of supply right here, right? So what happened? I just mentioned what the institutions like to do. So you price pulls back to this area, retraces back. You get into a short trade, right? Okay, then you got to get out because you're bumping. If you get in right here, you got support right here below. So what happens? Well, not naturally. What the institutions like to do is, they know people are going to enter right here. Okay, when price pulls back up to this area of supply right here. All right, so they're going to the market pushes lower. They turn the market around. Hey guys, welcome back to the channel. This is Future Trading with Mike, and I appreciate everyone who's been following the channel and subscribed to the channel already. If you're a sub, thank you, and if you've been dropping likes, thank you as well on the videos. I am an Emini S&P 500 trader. I like trading the ES, particularly the ES futures, which the ES is the futures market. It's a derivative of the S&P 500. Okay, so if this is your first time watching one of the videos, thank you for tuning in today. And go ahead and hit that red button, that subscribe button, if you don't mind. This is my live recorded session of me trading this particular market. I trade it each and every day, guys. And if for any reason that I'm not trading, a particular day, then I pretty much announce it in one of the videos. So like today, it's Thursday. If I say I'm not going to trade Friday on the video, then I'm not going to trade Friday. So most times I'm trading 5 days a week. Okay, so I have over 150 plus videos of me trading the ES. And if you're a futures trader, well, welcome to the channel, pretty much, and if you're looking to maybe learn or trying to grasp in straws for a particular strategy, well, maybe and hopefully you pick up some good valuable information that kind of points you in the right direction, guys. I'm not a teacher or an instructor. I've just recorded my sessions and I post them for information that maybe will inspire or help someone out there. I love the trade supply and demand setups or zones, and that's pretty much particularly what I do based on just basically price pulling back to certain areas. So I like to see price following, looking at the market structure. I like to see price, price action breaking certain areas or breaking levels, areas of structure, pulling back to it, and primarily pulling back into the area, not so much support and resistance area. I like to see price pull back into the area of supply or move up into an area of, pull back to an area of demand or move up to an area of supply, and then look to trade accordingly. So without further ado, let's go ahead and get started in today's session. I always kind of like to do I'm not going to say pre-market, but like to do a quick little analysis. It's about 10:15 right now. Starting on my day a little late. It's actually 10:20. But I like to look at recap of what happened yesterday with the 60-minute chart, and then we start rolling on. Okay. So right now, give me 1 second. I'm gonna grab the 60-minute chart from my other monitor here. Okay. What happened to it? 1 second, guys. Okay. Not sure what happened there. The recording froze up. Okay, so when I was pulling over the 60-minute chart, so bada bing, bada bang, let's get going. All right, maybe that'd be a little thing I'll say at the beginning of the video. Bada bing, bada bang, let's get going. All right, I like that. Maybe so. Let me know if you guys like that in the comment section. Bada bing, bada bang. What do you guys think? All right. Okay, so we'd like to look at the 60-minute. Why? Because I like to look to kind of get a direction or form a direction, of what the market's trying to do. All right. So, looking at yesterday on the 1 hour chart, the market, we can see here, it, kind of bounced around a little bit, then it pushed down, and it broke this low right here. So this is where price had pushed up, pulled back, pushing higher, making a high here. There's a low right here. Price after about 5, 6, 7 in the morning, shortly after the market opened up as well, the market just started pushing down, breaking this low right here. Okay, so at that point, the market has not tried to turn back around and push higher and breaking the high here. Okay, so it has not done that. Now we have continuously formed a low to the downside by pushing down, pulling back, and now we're breaking structure off. This low right here forming the swing. We broke structure this low right here. So my bias at this point will be on pullbacks, maybe going short. Okay, looking at the direction of the market. Now, if we look at what's going on right here, okay, this is the 1 hour again, okay, guys. So a price pushed down and then pulled back and then swung to the downside, making a low here. It turned back around, okay, and started breaking structure to the upside. When I say breaking market structure, breaking structure right here, this high right here at 25, okay. So price pushes up, all right, pulls back, forming structure to the upside. So With all that to say, let's see. Let's see what happens here. Let's see if we can mark some zones off. All right. Okay. So when price broke structure, this high right here, 20, let's say it's 28 right here. All right, pushed up, pulled back, broke structure here, and broke market structure right here. So as price is pulling back into this area now somewhere in this area here, uh, we're getting close down to 4,400. So price could actually come down to, let's see here. Yeah. Price could actually come down here to 93, but we can also bounce anywhere in this area right here, I'd say, because we're at the lower end of the high volume area. We're pulling back to an area of demand, okay? So um, I'm looking at, like I said, this area right here. All right? But it can bounce. It can even bounce where it's at now, to be honest with you. So just be careful because this wasn't an area price kind of moved sideways, chopping to the upside, forming structure to the upside or breaking structure to the upside. Now it's pulling back in a retracement, okay? So let's go ahead and switch over to so right now that we're moving into an area of demand, I would be interested in possibly taking a loan, okay? Now price turns back around and pulls back up, or retraces back up. I would be interested in possibly taking a, um, I'll say a short, mate, guys, maybe back in this area right here, somewhere right here. Okay, so right now, when I say that, probably around the 44, excuse me, 48 or 49 area, maybe 50, round and a half number, right above this little high volume node. So right, that's taking short. Okay, so right now I'm taking a look at I want to take a look at the 12 range chart this time and see what we got going on here. Okay, so that's kind of just like a little analysis of what I'm kind of seeing right now. Pull back, retrace back up, look for opportunity to go short because of market structure being broke to the downside. And right now we are tapping into an area of demand off the 12 off the 1 hour chart, guys. Sorry about that. So I am looking at price to see on the 12 range chart now what the market is actually doing here. So boom. All right, so here's an area. Let me see here. Like right here where price is at now, we can bounce right here. Possibly, but price can push lower because we have a high volume area right here. So let's be mindful of what we see going on here. The price bounce there. Yeah, but we have resistance right above. So this might be a little tricky day today. Let's see what happens. Okay, looking for my Superdome. Okay. Where we at? Okay, price is breaking that area. So, price is in the zone, guys. I'll be honest with you. I'm taking a shoot. I'm long here. Okay, I'm going long. Come on. Price is bouncing off. Okay, there we go. All right, quick little trade to this area right here. Price could push up back up to this high volume area right here, but I'm scalping right now. This is off an area of demand, guys. Okay, area of demand. Price pulling back to it. All right, but be careful here is because we have resistance right above us. Okay, and area price could bounce at. Yeah, price broke structure here to the downside, taking this area here out, breaking through structure to the downside. So be careful because this could be a pullback. Okay, but I went long right here because of the bounce of small area demand, and let's see. Now price could potentially come. Let's see. Let's pay attention here. Yeah, price could actually probably come back up to here, possibly this area up here, but this high volume node. So let's see here. So quick little scalp there. Not picking up too much there, but today is I forgot to mention, the 17th of January. All right, it's Thursday. Okay. Yeah, just picking up a quick little 11 ticks right there. Scalping, guys. Scalping. I'm a scalper. I don't position or swing trade. So if you're looking for that, then this ain't the channel. I go into detail. I talk about my trades and why I took the trades. Okay. This down here at the bottom, just came into Delta. I'm not using it just to, really, I just glance at it, but I'm not using it to really particularly get into a trade. Um, just kind of look at it from time to time. Given the Delta, I said this before, it just kind of measures, or it's a representation of the tape reading of the tape itself in a sense. So basically, you're looking at these are pretty much it helps let you know what the buying and selling pressure is in the market, like how much buying there is, how much selling there is. So you know, pretty much lets you know the pressure of the market, like more buyers are stepping in or sellers are stepping in. Let's see. Yeah. I mean, price could bounce here, but it's bouncing right off an area of resistance, guys. So, um, be careful here, though. I'm going short. Uh, okay. Boom, 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 boom. Come on. Just scalping for a point here. Looks like price is bouncing off an area of resistance. I really want to see it pull. Yeah, pull back a little higher. Back. Okay, there we go. That quick there, bouncing off resistance. I want to see it pull back into the area, more of the sort of area of supply here. But let's see. Just take a quick little scalp right there. It could come back down here and bounce right here at 44.03. So this is trading a 12 range chart, guys. So you can trade a 5-minute chart, pair it with a 60-minute if you choose to do so. Looking at a higher time frame, you can even look at like instead of 12 range, maybe look at a 21, 24, I don't know, 28, 32, however you want to do. If you look at a higher time frame, then it probably will allow you to stay in trades quicker. But I like to make a few points and get out the market and wait for the next setup and then get out. So I take my trades. It may not be the style of trading for you, but what I'm trying to say, this is how I profit each and every day. I look for scalps. I'm not a greedy person. I don't sit and try to sit and trade, but I like that to make what I can make and get out. Everybody has their own strategy, their own style how they trade. So, don't knock mine. I'm not knocking yours. So whatever, if you like what, if this is not for you as far as scalping, then that's okay. But I do this for a reason. I don't charge anybody anything. I'm just basically here to show you my trades, and that's pretty much it. Explain why I took the trade. Took the trade because this is an area of resistance right here. Price bounced off of it, red candle close, and I was taking the trade right back down to this area right here where you see price just bounced at. So just for a point, that's all it was. Sometimes you got to scalp sometimes. When the market's tight and it really hasn't done much. I mean, we've had the market open up in this area right here. Just has a little push right here to the downside. That's it. Swing down, pulling back, swing down. That's it. Okay. So I'm just scalping. Whether it's you making $2,000, 3,000, $1,000, or a couple $100 a day, that's fine. I'm okay with that. It all adds up, at the end of the week. So it is what it is. So I'm just gonna wait here and see what happens. I'm gonna look at the 1 hour again. I mentioned that we're bouncing off an area of demand, guys. So off the 1 hour chart. Okay. Yeah, and it could bounce anywhere, guys, where it's at. You know, it could push lower, but this is an area of demand. Definitely an area of demand. So you can look for buy entries, like I said, and trade accordingly. Yesterday, if we look at the 12 range, didn't the market kind of, let's see, after the opening, traded yesterday. Yesterday was the 16th. Yeah, we started breaking some shortly at the opening. The market pushed down, but then we turned back around. Um, it looks like we may have bounced off an area of demand, a small little area right here. Okay. And in doing so, market just kind of pushed up higher, started grinding to the upside, breaking, market structure where market was pulling to the downside or moving to the downside. Guys, and I don't use a bunch of technical indicators, a lot of, EMAs, SMAs. I just visually, I like to look at price action. I study price action. I look for, just look for setups based upon price movements, and follow market structure. My biggest thing, what made me, where I became successful, was understanding market structure, was being able to look for breaks in the market to where prices breaking structure, and meaning breaking market structure. Like, say for instance, like right here, where price pushed down, pulled back, and then made a lower low here. All right, then it turns back around and starts breaking this structure to the upside. So two things I look for. I look for price to break structure when it's, break structure. So, taking out this high right here, pushes up, okay, pulls back, swings higher, okay. So at the price break structure, and then I see a swing to the upside, okay. The swing to the upside, say for instance, like a push to the upside, push up, pull back, pushing higher, breaking structure. Well, I know demand's going to be, tucked back in the area of the swing. So I'm looking for price to break market structure, and then as well, if it's breaking market structure to the upside, also breaking structure means making swings where it's making higher highs and higher lows to the upside. Okay, and then when it pulls back into those areas of those swings, then I'm looking for price to reject and look for an opportunity to go long. Okay, that's if I'm going long, and it's the reverse if you're going short. So, but yeah, I'm not big on looking at looking at a lot of technical things in my charts. A lot of indicators, because first of all, I like clutter. Secondly, it's just too much for my eyes to be, looking at multiple things at one time and having all these different. I'm not saying it's a bad thing, because sometimes people will say that the more they have that comes together, meaning confluency, it helps them predict and get into a trade. It gives them their bias, not bias, more say, but it helps them get into a trade, I should say. Nothing wrong with that, but I purely like to just follow. I'm simplistic. I like to simply follow what's going on the charts, and I'll leave it just like that. And I don't get all, complex. I'm not a complex trader. I'm a very simple trader. Okay. All right. So let's see. Price is pulling back. It's pulling back. Okay. Okay. Price is a little volatile. Pulling back. Okay. Let's see what happens. Bounced. Didn't quite get to the area I was looking for. Okay. Yep. Okay. Price is a little volatile right now, so I'm going to hold off. What time is it? 10:30. Okay. So the market's getting a little volatile now. We have to be mindful. Let's take a look here. Well, today we have, let's see on the calendar, you have FOMC member speaking today at 11 o'clock. There was a natural gas storage or inventories that was at 10:30 this morning, just a short bit ago. So they have a little news going on right now. So those things can definitely have impact. So we kind of and then at 5 o'clock this afternoon, but I'll be well out of market by then. Okay, so we do have a little news going on right now, so that's why the market is kind of moving the way that it is. This morning was the unemployment claims That was at 8:30 pre-market. So okay, so we'll minimize that. And what time is it now? Market's a little volatile. 10 minutes till the FOMC meeting, or one of the announcers or members speaks. All right. So price is bouncing once again in this area here where I had this red line at. I mentioned that was the area of demand. Okay, that's demand. We're in a demand zone off the 1 hour and a little small little demand area off of the 12 range chart. So we have confluency there. Okay. 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 Price bounce off this area here. Yeah. Okay. Yes, I am long. Come on. Mm-hmm. Hmm. I don't want to see price break this area of structure here. Okay. Gonna have to scalp. Okay, come on. Come on. There we go. All right, I'm quickly scalping to this area right here, back into the top volume node. Okay. Price took a little heat on, but this was an area of demand right here in this small little area right here. So I was taking a quick little entry back up to this high volume node at the lower portion of the high volume area, back up to the high volume node. Okay. So I'm trading areas or zones of confluency, levels of confluency off the higher time frame with the 12 range chart. Okay. All right, quick little scalp there. Let's see what we got. Okay, so a couple ticks there. I have a 1 tick loss right here. Probably due to slippage, doesn't matter, don't care. 30 ticks right now, up on my trade entries. Took a short entry, looks like, and followed up by 2 long entries. Okay. Okay. Not sure what's going on. Okay. All right. Yep, there we go. See price pulling up, bouncing from the bottom right here, area of demand. Okay. So let me show you this small little area. What happened here? Price pushed down, pull back, made a low here, right? Turns back around, taking out structure right here, market structure, swings up, pulls back, makes a higher high. Okay. So the area of demand is going to be in this area right here, this zone right here. I'll show you right here. This is the area right here. Okay. Price pushes up, pulls back, breaks structure, taking out this high right here. But not only did it take out, when it made a structure to the upside, meaning making a swing to the upside, it also took out market structure here to the left, which was that small high right there, a little high. Okay. Then it pulls back to the zone right here. Okay. Came back one time, pushed up. Be mindful because you have resistance right here. Pulls back again, bounces. All right. And back up to this area here, this high volume area so far. Okay. That's okay. All right, let's see. What time is it? I'm going to halt from trading right now because we are right at the 5 minutes to the FOMC little meeting or announcement speaking. whatever it is today. Okay, and that's scheduled at 11 o'clock Eastern time. All right. Okay. Be mindful here because there's an area of supply right here, but we also have let's see what we got here. Yeah, I'm gonna hold tight right here. A little confused as far as what price is trying to do right here. But that comes with the territory of trading. We have this swing to the downside right here. Like to see price take off structure here. So all in all, we haven't done too much today. We're kind of grinding, moving sideways still in this area. We're actually in a wedge, as you can see. Show you price is wedging right here. So wedging, building volume here at the lows. I mean at the bottoms here. And on the 12 range chart. So we're moving sideways, just grinding to the side. Okay. All right. See what happens. I'm going long for a quick little scalp, guys. Come on. Push up. Quick little scalp. Come on. Yeah, I better just scalp a few ticks here because we're right here at this high right here, top of this little high right here. Okay, first contract field, second one field. Okay, just scalping. That's all. I haven't just wait for price to really give me a direction. We've pulled back to the top area in this high volume area. So, like I mentioned earlier, I don't use a lot of technicals to trade. I just like looking at volume, where price lies at, and you know, where the zone or level I'm looking for, and kind of what price is doing when it gets to that area, the zone right here, pretty much, and you know the area where that zone sits at in relation to the high volume area. I mean, excuse me, to the volume profile. So that's what I'm looking for. Okay, I'm scalping, going for a point here. Price pull back down to this high volume area at least. Come on. Bounce right off of it earlier. Right there, 16 and a quarter. So this is a 12 range chart. So scalping using 12 range chart, which you know I'm not looking to make. Come on, hit it, feel it. Bounce right there it goes. Okay, we got field there. All right, 1 point on 2 contracts. So there again, pretty good. Let's see what I have here. Okay, so let me show you. I took a trade, and I believe it was actually not recorded for some reason. I'm not sure I'm not sure what happened there. If I didn't hit the recorder when I was trading, I placed the trade. But anyways, right now I'm up 41 ticks today. Did take a little slippage on, not slippage, but got into a trade that kind of Came back, and I got out. So of the trade, picked it back, made the difference back up. So I'm up 41 ticks right now. Okay, I told you, I say this over and over again. The goal is to um, end up green on the day. You may have a losing trade. That's fine. If you have a losing trade, then you just, make the difference back up. What is this thing doing? Doing some crazy stuff. There it goes. Okay. So let's see. Someone had asked, you know, do you ever have losing trades? Of course you have, I try to minimize the losing trades sometimes, but depending on the pace of the market, sometimes you may get in and the market's not always going to go in your direction every single time. So when you notice that the market's not going against you, and don't take too much risk on, I have a mental stop. From the moment I enter a trade, I know right below that trade. So if I get into a trade, say for instance, like right here, which is a small area of this is supply right here, and price. So I take a short here. If price breaks above pretty much 44.19, I don't put my stop right there because I know they're going to hit that stop. I may put it a few ticks above, 3 or 4 ticks above, and they stop me out. They stop me out, But sometimes the market will race real quick and get volatile to where it's not moving in your direction, and you just get out the trade, guys. So I know I don't mark an actual stop because I know what the market is, what the institutions are going to do. Like right now they're hitting stops or whatever the case is, and then they may turn this back around and push it back lower. So they know people's stops are sitting right up here. Okay, they know the actual people are going to come back up here when the market retraces back right above the top volume area and go short. Okay, and then they market push a little lower, they push the market up, stop traders out, and then push that market back in this direction to the downside. I'm not saying that's going to happen, but that's just how they move sometimes. That's how they move most times. Okay, so the market can continue pushing higher. Looks like we're trying to break structure right here to the upside, and yep. So had a little trade there that I took that didn't work in my favor, and I took a little loss there, but got back into it. So that's the key to it is don't have look. If you're having losing days, then you're not doing something right. It's all about being in the green at the end of the day. And not saying you won't have a losing trade or have a little slippage, but most times if you know where to get out at, you're either gonna break even or just have a couple ticks loss. Don't sit into that trade. That market, starts to come back and not move in your favor, then get out. All right. Okay, we're just moving sideways. I keep telling you guys, we're just chopping sideways, moving, grinding to the side, building volume right here. We could break structure right here to the upside, so we'll see what happens. Okay, so I told you this area right here is an area of supply right here, right? So what happened? I just mentioned what the institution like to do. So you price pulls back to this area, retraces back. You get into a short trade, right? Okay, then you got to get out because you're bumping. If you get in right here, you got support right here below. So what happens? Well, not naturally. What the institutions like to do is they know people are going to enter right here. Okay, when price pulls back up to this area of supply right here. All right, so they're going to the market pushes lower. They turn the market around, push it higher, and look, they wick it out right here. The high right there, they wick it out. Why? To stop traders out and then push the market back in the intended direction to the downside. Okay, so it's the game they like to play, guys. So you got to know where to put your stop at. You put your stop right here at the top end of the high, this candle right here at 44.19. The institutions are going to stop you out. So give yourself some breathing room. That's why people lose so many trades, is because they are unsure where to put their stop at. That's the biggest thing. Is where to put my stop at when I get to a trade. That's something you're really going to have to think about, because you have to understand that retail traders are not the driving force in the market. It's the institutions, and it's a game they like to play, and they play it very well to stop people out and collect their money and then move the market back in the opposite direction for a short period of time. I'm not saying it's going to be long-lived, but like this instant right here, Price retraces back to an area of supply. Boom. All right. They know people are going to get in the trade as soon as it hits there. And then, you know, like I did, but I knew where I was going to get out at. You know, I knew price would come back down here, hit this area here. And that's why I got out right there. Because one, it's at supply, right above a high volume node, a high volume area. You have a level sitting right here, support, and you have a high volume area right here. Price is going to bounce right there. But the thing about it is that the institutions know people are going to get in right here. Market pushes lower, like I just said. Okay, green candle back to the upside. Okay, it doesn't continue pushing higher, taking out this high right here. What does it do? It wicks out at the top, the high end of this candle right here. Okay, they stop traders out, and then they push the market back in the opposite direction, down to, you know, pushing it lower a little bit. Okay, before, you know, deciding what's going to happen next. Either way, what I'm trying to say is that that's how they stop you out. That's why so many people get frustrated, because they lose money time and time again because they stop right at the top of, right above where their entry point is. So if this was your area of, you know, where your stop was sitting at, I'll mark it. Let's just show you. I'm going to tell you. Show it to you guys. Right here. Right above this candle right here. Okay? So you got in at the close of this. You got in right here. Okay? You put your stop right at the back end of that candle right there. All right? You start to come in your favor a little bit. Institutions turn the market back around. Boom, they stop you out. By how much? Let's see. 44.19 and a half. A few points, you know, 2 points, whatever the case is. And then they push the market lower, okay? And the intended direction of what you want the market to go, okay? And that's how they play the game, to stop you out. And that's how people lose money all the time, because they carry such a tight stop loss. Do not do that. I'm telling you, like, you'll get stopped out most times, okay? Give yourself some breathing room. The question I get all the time is, well, you know, how much should I allow for a stop? Me, I'm not saying you get to do this, but my golden rule is between, you know, 10, 12 ticks sometimes, you know, it depends, or whatever the case is. But I know I've been doing this for such a period of time until I know what they're going to do once it gets to an actual area of supply or demand, you know, support resistance area. So you got to kind of play the game like they do, all right, and understand what they're doing. When you're able to fall in line and understand how the institutions move and what their games are, then that's when you start becoming profitable, very profitable. Okay, I'm gonna go ahead and close the video out here. The market's not doing too much; it's kind of moving, it's grinding sideways, and we're in a wedge. So don't like price action right now. The pace is too slow for me right now, so I'm gonna jump ship and maybe look at it a little later in today. If you're trading, be safe in the market, guys. If you haven't subbed to the channel, please go ahead and hit the time, hit that little red button, hit that button that says subscribe, and hit the little icon, the little bell notification icon, to ensure that you never miss one of the uploads. See you in the next video. If you're trading, be safe.